Hedge, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the quick stock market analysis show that we have every day, where we look at technical charts and try to understand what happened in the market and then plan for a better trade for the upcoming day, which is December 28th, Thursday, tomorrow of 2023. It's monthly expiry tomorrow. Okay, but before that, what happened today was really surprising. Seriously, I never thought that there would be such a breakout for the third time this December month, and that too at the frank end of the year when the volumes are supposed to be less. That the market has surprised the bulls, surprised the viewers, or surprised those who thought that it would consolidate, or at least, but it never happened. Market broke out today. Right? Market is, in fact, it made a new all-time high, and it's breaking out and surfing the waves on the very highs, and that's what happened today. So we have all the details here. Let's look at what the charts say before we further go. So here we have, let me just take out this, and let's see the candlestick alone, remove all of those, and see this. It's a gap up and a wide range bullish candle for sure, and it looks like lower low, not that. Open is equal to low. Extremely bullish candle. The candle does not have a weak on the downside. It gapped up and it never came, not even a second. Right, and it closed with a bullish candle on Nifty and Banknifty also. Look at this candlestick. It's a wide range bullish candle on the Banknifty and the Nifty. Both made 1% plus kind of moves. That's 213 points on Nifty, 550 plus points on Banknifty. And if you put on the patterns, it is still at the very top of the trend line channel, and it has made no all-time high, and it has broken out of the 78.6 Fibonacci extension also from the previous swing highs. Right, and look at Banknifty. It's the same. It is at the very top of the trend line channel. No, breakout 1, breakout 2, breakout 3. So the third breakout from the consolidation. That's what is seen in Nifty also. Right, we had the first breakout here with the gap up. The second breakout. First one was after the election. Second was Fed, and now for no reason today there is a breakout that has happened. So the Santa rally, is probably what we can name it. Than that, I don't know about any specific reasons why it should have, but still we have to be very cautious. Before that, just let's quickly look at the levels. So tomorrow's a monthly expiry. It's tend to be very volatile. After a big breakout move Wednesday, Thursdays tend to be likely of consolidation nature rather than continue that without any pause. Less likely. So that's what we could expect on both indices. But market is on steroids for sure. It's surfing the very high waves is what we can say. Right? It's an unknown territory out there. Nifty, the levels, if you see, next would be to take out the every 100, 21,700 first resistance, then 21,800, 900. Likewise for tomorrow, it may not be on the upside. It may be consolidating probably, but supports would come in. First one is at near 21,500, which is a gap that was formed today. Then you'll find after that 21k, which is the Fibonacci 61 and 23.6, and moving average, exponential moving average 20. All of those confluencing. So 21k would be the biggest support that can be expected. And if that is breached, it can go to the next gap at 2,700, 2,500 after that, which is again a confluence of 38 and 50 Fibonacci extension, Fibonacci retracement and extension levels confluence, 2,700 and 2,650, that zones. Then 50 DMA is coming at 2,400 like this. So that's about, we'll not go too far. So again, if it breaks out from this channel top, which is less likely because of the fact that it has made big move today, next day it's tend to be very volatile, and then finally it may end up flat. That's what I claim. But the first candle will take out the 48,350 once again, and then it's all-time high. After that, resistance would come in at 38,500, and then 49,000. It may not go beyond that for sure from Monday. Support can come in at 47,400 now, previous swing low, and after that it will come to 61.8 with match extension and 23.6. Retracement level at 46,800 buy zones. 46,900, 800. No, between that. And the gap support will come at 46,500. Let's see, major support downside. Right. That's how it is. So let's just wrap up and see what happened. So it's 214 plus 0.1% more. Another 1% more Banknifty also. There is 1.17, 550 plus more. And wide range bullish candle formed. No, it was a gap that is created in Nifty. No gap in the Banknifty. Banknifty is. So remember, we have a 25% on Banknifty and 29% rally from the bottom. This the previous window rally itself is around 15% now. Intraday, if you look at, it was trending up, but after 3 p.m. it breakout really big. And while it was trending during the day, it was very volatile. It did a dip, V shape and all. Intraday dip, it was well little bigger one, so it was very volatile that way. But it was trending in a way, if you look at the hourly charts. And 3 p.m. did the big breakout not expected. So Fyers was selling last 5 days, 6 days. Last day only small selling. Since they are on holidays, they will not participate much. But the other day also it was buying that was happening from the DI side, right? In the cash market we are talking about. But I was bearish on the FNO and on the options also there. Options they are bullish, and as of yesterday's data. So there is some kind of big buying that's happening from mutual funds or retail participants, brokers, products, whatever. Although without the presence of Fyers, there is big buying that has happened today from somebody. So this day may not be Fyers because it's holiday season. There's less likely that. So it might be the prop traders or the brokers and retailers, and anyway, big money is coming and flowing in the market. It's moving on. Resistance levels we already talking about, repeating that levels. Supporters also we have talked about. There is absolutely bullish. Trend indicator as per the ATX is in the Demat post is also rising up. So trend and momentum intact. Bloody bullish. That's what I would say. Now, for a non-directional trader, it's very tough when the market is direction either upside or downside. Right? Too much direction. If it is less directional, or slowly, when this vertical move happens, no directional traders cannot do anything unless they go for the opposite side, spreads along, right? Not the trending side, the opposite side. Let's see. Try to catch the trend, roll down, will screw up, no matter what it trades, especially in intraday. Opposition also, they have such big gaps that happens consecutively 2-3 days. The range goes beyond what you had anticipated when you took the position, and then adjustments, does not make much enough effect. When such big 3 p.m. spikes, moves comes in. Anyway, the VIX has spiked to 15.5, but 6% yesterday to 7%. So total around 50% of rise in the VIX from the 10 point something levels to the 15.5 kind of levels is what we already said. 50% rise in last just from the August. That's 5 months. Right. So VIX is rising up is fine, but it's going beyond the 15 towards the 20. Then you have to extremely cautious to cut short your position size bet. Otherwise, option sellers may find it personally easier as compared to previous times because of the fact that implied volatility percentile is at a very high, and the hope that it can cool off rather than spike further up gives hope for the option sellers. Premiums have increased. The IV implied volatility and realized volatility spread difference also is somewhere in the mid range, not that bad. So technically, if you see the charts, it's extreme bullish. It's online highs and breaking out and breaking out and breaking out, third time in a month. Huge vertical moves, and then obviously, as a technical analyst, you have to be cautious, especially when VIX is spiking up and the market is rising up vertically. There was a flag pattern yesterday of the daily candles, and it did come. There was divergence also. Divergence between charges and flag pattern can break out more. Can have the targets. They can take it 22k on Bank Nifty, probably 49 or 50. In fact, even 50 can be possible on Bank Nifty. If the flag pattern that we talked about yesterday, which had problem today, is to meet the target. Yeah, momentum is absolute bullish. Divergences are there, right? And trend is also played. So charts absolutely bullish, but we have to be cautious just for the fact that we have done big moves in just a very short span of time. So otherwise, all the major industry sectors, if you see, it was they all close green. It is not the IT, even the IT. Even the IT close green. All of them close green. And all sectors are bullish. With respect to the short-term bullishness momentum, auto and metal did a 1% move, so they did well as compared to the other majors, 6 or 7 sectors. Now the industry heavyweights that contribute maximum to the stocks also close green. That's the ICC Bank, all others industry heavyweights, big stocks. They're all in the short-term bullish. ITC, HDFC, Kodak Bank, right? ICC, except the ICC Bank, all in bullish. Right? Infi, TCS are all in bullish mode from the short-term momentum perspective, right? So, sector leaders, industry sector leaders are all of them are green and bullish, and for this momentum and trend, heavyweights are all green, all driving. Then nobody can stop, right? That's what is happening. These indices are showing green at the top. They're also doing beautiful rally. Right? All-time highs are made the Dow Jones and Nasdaq, and even S&P 500 might be hitting that day soon. So global cues are good as well as the US indices are concerned. Dollar is falling, but the rupee remains weak and spike up. In fact, so that's kind of a worry. But crude oil is showing some red after trying to spike up because of the shipping issue, and remember it had fallen substantially from the top, even went below 70, but it has climbed back in the sideways mode. Gold is also made the all-time high and then got into profit booking, and resistance came in, and then it's not ready to fall down. It's staying there and spiking up and then consolidating before it makes another new all-time high. So commodities, that's how it is. No major bad cues at all cues reasonably good as of now, unless a black swan comes in. So this is probably the time for momentum is not very interesting because time is over. Market has start up and heading towards 22k. You can get rental incomes by covered calls and covered put strategies. Check out the playlist for that option strategies in the videos playlist. So as far as the trend is concerned, the direction is very clear. It's bullish, up and up. That's it. But you got to be cautious. This is where you get trapped. So direction strategies has to be where you have to focus on primarily. If you're non-directional, have spreads, cover and hedge your positions so that and this VIX is spiking up, heading towards 20. So once it's touching near the handy 20, cut short a position size. That's the only thing that you can do. And go directionally, non-directionally. If you are playing, then cut short a position size. Right. That's the only thing that can keep you alive from big gap ups or black swans, whatever. Right. So tomorrow we have the monthly expiry. Expect volatility and levels as of now, as per the open interest is 21,500 and 22,000 on Nifty. The highest put and call writing is C. Put call ratio is 1.41. It's bullish, extremely bullish actually. 47,049 is what Bank Nifty is. PCF Bank Nifty is 1.38, extremely bullish. So absolute bullishness is what open interest is saying, no doubt. Absolute bullishness price pattern saying, no doubt. But tomorrow is expiry, monthly expiry, and such a big monthly expiry. It's going to be such mega moves happen just in 3 breakouts in 1 month. Can you believe that? Right? 15% in a single month. More than that probably. Yeah, 15% of move in the indices from 20,000 nearby. Now it is 21,650. Can you believe that? Such was a ferocious move that has happened. So what is going to happen every day, especially when it is expiring. You would have big bets that's placed on body puts and all sides. So be careful on that. And Fortunately, also you had booked some profit this time. Right, play it safe. Otherwise, market views and charts are shouting out us it's bullish. No doubt about that. But caution is what India which is telling us. Okay, keep that in mind. If you're not subscribed, please subscribe and share to friends and colleagues so that it reaches out to max. Thank you and happy trading, happy learning, happy investing. Bye bye.